Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So what we're going to do now is we're going to have just a market update on what's going on right now in the stock market. A lot of people, when it comes to the stock market, one thing I want to start off with this video with is that your emotional state when looking at these markets, okay? It's so important that you don't be, you don't have an emotional reaction to the markets. It's so important to try to stay emotionally calm. And, when you're in a trade and it's not working out, just get out of it, cut your losses and go find something that is, when you do get into it, it's actually nice. It's going to keep, moving for you. For the last few days, we've actually had, a couple of down days, okay? And people have just been freaking out saying, that they're so pissed, that they missed out on this drop here. And now I guarantee you so many people would have started short in the market thinking that this thing was going to continue down. And I want you to really understand how these markets work, right? What the markets do. Because looking at these markets right now, we still have a chance of holding here and continuing up. Now, guys, I'm not saying what's going to happen because I have no idea what's going to happen. You don't, no one doesn't, right? But it's so important that you look at the market for what it really is. And we could be actually, this little pullback here could be a little shake and bake before we run up to all-time new highs. Oh, John, that's not going to happen. Well, what was August? And then we ran up to all-time new highs, you know what I mean? So we've had a sharp drop, and now we actually we're holding this sort of level 3 here quite nicely. So we'll still make a low, and we still could be making some sort of high low through here. And as you can see, right, it's more like a triangle pattern that it's compressing up against. And if we form in this triangle pattern, this could be a bullish breakout. Like again, I don't know, guys, but it's so important that you don't have an emotional reaction, because I had someone on my YouTube channel the other day when they saw this move here, right? When they saw this move from there to there, right? They saw the move down. And one thing that it's so important that they go, "Oh, John, you know what? 100-point down day and the SPY is nothing. What are you talking about?" And it's, or they said something like, it's like, John, missing out on 100-point down day and the SPY is nothing. Guys, you cannot predict what's going to happen tomorrow, right? You can trade and you have good risk management, but you don't know what's going to happen tomorrow. That's why you need to protect yourself on any given one position, right? Because you need to be in a situation where if you do have a couple of losing trades, it's so important that you protect yourself. So you're counting down maybe 1 or 2%, maybe a few percent, and you're ready to go for tomorrow. You know what I mean? It's like, take care of yourself. And so you don't want to just be jumping in these markets. Say, you know what, this is what's going to happen. This is what's going to happen. This is what's going to happen. Especially right now, guys. Like, right, the volatility right now, guys, is picking up immensely, right? Immensely. And it's so important that as this market volatility is picking up right now, and I do believe we're getting closer to a top, because generally at a top of the markets, the volatility picks up. Now, again, it may be just gone through a bit of resting phase before we continue higher. That's yet to be seen. We could see today's candle on the S&P 500. Today's candle was a complete reversal candle. And guess where we're at? Right at my support level here. So this is the support level, and and we're probably likely to come and fill this gap. See this bit of a gap here on the S&P 500 and also the Dow Jones. See that gap there? That's what we're probably likely to start to go up and fill, moving forward. Now, it depends on what happens. We don't know what's going to happen afterwards, but there's a very high probability that this reversal candle right now is probably even like the SPY, right? Look at that gap there, SPY. And if you look at the DJAI, look at that there. We're probably likely to come back and fill this gap here. Now, that's going to be like a 1 or 2 day trade, but that's all it's going to be, right? And again, same for the SPY as well too. So please, guys, don't have an emotional reaction to these markets. Okay, what's so important is that you try to look at these markets as an opportunity basis and protecting yourself at the exact same time. And don't think that you need to get every single day right, because that's not how you shouldn't be looking at your trading approach like that. because it's completely the wrong way to do when looking at these markets. And it's so important, guys, that you slow down and you don't try not to let your emotions get involved. And if your emotions are getting involved, you're trading way too much of your account. Way too much of your account. And within the mix of this, if you slow down with your emotions, you just let the market do its thing. Okay? So again, like a lot of people think that right now this could be the top in the market and this is the start of the next crash. Now, guys, I want to remind you of something here, okay? When we're talking crash, I know you visualize one big red down bar, right? That could be a day, that could be a week. But do you realize when we're talking about a crash in the markets, it takes 12 months to 2 years to completely unfold, meaning from start to finish of that bear market. So please don't be freaking out about 1 or 2 days in the markets, thinking that you've missed out and you better get in now before it keeps going down, and all this FOMO action, right? People do it so much. They FOMO in the market so much because they think they know what's going to happen. Because, guys, it's so important that you just look at the market and say, you know what? The market can keep going up until we actually hit the election next year. Like, we don't know what's going to happen, right? But that's the reason why we need to completely listen to these markets and fold with the markets. And at the bottom of this, guys, okay, we have the SPY, we have the S&P 500, we have the Dow Jones, we have even the Nasdaq, right? We have the Nasdaq. And guys, within all of these markets through here, okay, as we can see, if you are not, this is the Nasdaq here, and we had the breaking of that low through there. This could be some sort of false breakout here too, guys, as you can see, right? Like, we've got this triangle pattern, we break down. Again, is this going to be a true breakout, or is it going to be a false breakout? If it's going to be a false breakout, we're probably going to get back in, and then we're going to see this as being a false breakout, and then guess what? We're probably going to start to race back up to new highs from there. So it's really interesting to see what's happening, right? But the volatility is picking up massively, and within these big volatile times, guys, stop trying to be right with the markets and trying to force your way into the markets. And getting emotional about these markets is not the right way to go. It's remove your emotions. And the only reason why your emotions are engaged in these markets right now is because you're trading way too much. You're trying to make too much money too quickly. If I get into a trade, the wins are not exciting me and the losses are not hurting me. And that keeps me in a level playing, right? So I'm in some trades right now. I'm in some losing trades. I'm in some profitable trades. I didn't care. Whatever, right? Cut my losses short. And the trades that are actually working out for me, hold on to those, and they're winners, right? So by looking at these markets, guys, and by looking at that, it's so important that you keep an eye out for this, and don't be so, if the market has a big down day and you're like, oh my goodness, I knew I should have gone short yesterday. It's like, no, because it's not about luck, okay? Luck has nothing to do with you trading well in the markets. You trading well in the markets has everything to do with having a plan, and then within that plan, okay, within that plan, you have good risk management and know that you can cut your losses short, let your wins run. And so within that, you can do really, really, really well. Make sense? So guys, I really hope that you can see, because I noticed, especially over this last week, I've noticed that a lot of people get so emotional about a couple of down days, right? So for example, I've been saying that the buyers are building pressure here and it looks like it's going to break up. I had no idea. And then we have 2 down days and people are freaking out. Oh, John, you got it wrong. It went down. It didn't go up, blah, 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 blah. All this sort of stuff, right? And they freak out completely. And they start to point the finger. It's like, you were wrong, John, and all this sort of stuff. It's like, it's not about trading, guys. It's never about being wrong or right, because you can never predict what's going to happen tomorrow. And if you do, you were lucky. Not that you were right. You were lucky. Right? What you can do is have a trading plan that you follow, and then some trades are losing trades, some trades are profitable trades. Stop adapting to the markets of, a losing trade is a wrong trade. No, a wrong trade is just taking it based on because you thought it was a good idea, not based on some sort of setup or some sort of plan that you follow. See what I'm saying there? There's that whole right and wrong in the markets, right? I got that right. I got that. You were wrong and I was right, and oh damn, I got that wrong, and all this right and wrong with you beating yourself up. Don't do that to yourself, guys. because it's not good for your emotional psyche for the trading. And you need that when you are trading the markets, because it's not going to help you become a good trader, right? I got this right, especially us guys, right? I got it right. It's like yippee today. You know what I mean? It's like, wow. You know, it's like, who cares? Because trading is like, you know, it's like if you do place a trade in the markets and it's a losing position, just because it's a losing position doesn't mean you got it wrong, right? It just means it was part of what? It was part of the losing trades. It was part of the losing trades if you're following some sort of plan there. So guys, I really wanted to do this video mainly and just talk to you guys about this, because it's such a, you know, and most people don't focus in sort of stuff, right? They're just like, show me the trade that's going to make money definitely today. It's like, that doesn't exist. If you are looking for that, stop trading right now and go away from the markets, because you are doing yourself a dissatisfaction, because you're not playing within the laws and the rules of what it takes to get ahead long term in the markets. So be smart. Try to remove your emotions. And if you think something's going to go up and it goes down, don't say you're wrong and I'm right and all this sort of stuff, and I got that wrong and I got that right, and this right and wrong attitude, and, you know, beef up and all that sort of stuff, and try to put the black coat on type thing and think you're better than everyone else. It's like, no. If I have a really, really good trade, I'm not better than anyone else. It was just a good trade. Next trade. Oh, there was a losing trade. Cool. It's not that I was wrong or right. Your wrong or right is based on whether you follow the plan or not. And your wrong or right is whether you followed a good risk management. So even if you did get into a trade that didn't quite meet your rules and you knew you shouldn't, you still protected yourself by getting out and cutting your losses short. Throw that wrong or right out the window. You're no better than me. I'm no better than you. And if you look at anyone on this planet, no one is better than anyone on this planet. They just work harder sometimes. They work hard on their discipline and their consistency within the markets. Okay. And so within that, there is no need for beefy heads to say you're wrong, I'm right, you know, blah, 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 okay? Because in the scheme of things, that's not how successful, long-term successful works. You're going to have losing trades, and what you think is going to happen doesn't happen. That doesn't mean you're wrong. It just means the market changed her mind, and you need to follow what she is doing. Otherwise, you're going to get creamed. So listen to the market, keep following the markets, and especially right now when the market is getting very, 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 very volatile, you need to be really, really, really patient. Keep your powder dry and wait for good quality setups. I cannot stress that enough. Otherwise, you're going to get killed.